Yo, good morning, traders, and welcome to another episode of Market in the Morning. Do we have a special episode for you guys? We have the one and only co-founder of Market, Jeev, joining us today. He's going to go over some analysis, cover the fundamentals of what's moving markets right now, as the ceasefire has began, but we're still getting a bunch of headlines. So guys, round of applause to Jeev. Hit that like and subscribe button if you're ready to make some money, because Market in the Morning starts right now. Yo, Jeev, good morning, man. How are you?
What's going on, Kevin? Yo, missed seeing you here, bro. Good to be back. Welcome back.
Bro, welcome back indeed, man. We've missed you on the channel.
Yeah, you know, man, life is busy. All these businesses going on, trading, markets have been wild, but I'm glad to be back to try to provide as much value to the audience as possible, right?
That's awesome, bro. Let's get right into it. I'll bring your screen up. What's going on with markets?
So, of course, in the recent about 48 hours, we have had this temporary ceasefire agreement, right? This led to a little bit of a flush out here on crude oil, which you can see Trump announces a 2-week ceasefire with Iran suspending attacks. But I think in these markets where there's tons of different headlines, so much news coming in, thousands of headlines, which, mind you, by the way, we introduced a new high impact filter here. So now the news is filtered to an even higher level, seeing what asset classes are actually being impacted. But I think a good piece of fundamental advice, a golden nugget for the audience here, is focus your attention on oil price, right? Now, something like oil, it's not meant to trend. Oil historically stays in between an equilibrium because how heavily it's used in our day-to-day lives and economies. If oil price is too high, it's bad for the consumers. If oil price is too low, it's bad for the producers. So when oil price is elevated above $80 to $90 a barrel, this is telling us a lot about how the market whales and major market participants that move price are positioned regarding these tensions. So let's try to clear the noise a little bit and let's look at some of the actual facts. First thing I'm looking at is that yes, oil has had this little bit of a flush out, but the swing trading time frame and the day trading time frame remains bullish. We're still above critical buyer levels such as $90 a barrel. Even having oil above $85 a barrel is still a heavy impact on energy inflation concerns, therefore, thus, still keeping rate cut bets on edge. Now, I have seen ceasefires and true resolutions with wars before, and I've back tested it with previous situations. When you have oil sitting at $90 to $100 a barrel and there's a true resolution with a geopolitical conflict, within a day or two, it melts back down to $60 to $70 a barrel, right? It doesn't just flush out down to 90 and then start to create a support. What this means is that the continued disruptions in the Strait of Hormuz, plus the temporary ceasefire not involving Israel as they're still attacking Hezbollah in Lebanon, is fragile. It's fragile like a fat kid on a cracked glass bridge, and it can break at any moment this fat kid oversteps, right? So we've had a pretty aggressive relief rally in stock markets, but that is something that is very similar, if you don't mind me showcasing an example, to the 2022 rate hike cycle and Russia versus Ukraine tensions. So this is SPX during the 2022 rate hike cycle and Russia versus Ukraine tensions. You can see as we were continuously printing these lower lows with the Federal Reserve doing their most aggressive rate hikes in history, having Russia invading Ukraine, increasing global fear, uncertainty, and doubt, as well as oil at that time was also at $80 to $100 a barrel. Into the start of June and July, we saw this aggressive bear market rally and relief rally. It even started to break above key resistance points to the left and really looked like the generational buyers were back into the scene. But you can see here, as energy inflation concerns remained elevated, as the Feds were still front-running and front-loading aggressive rate hikes, and there wasn't any chance of stimulus, you still had this huge downside move, faded out the entirety of the upside, and we saw that a similar pattern on SPX has been taking place since the 2020 pandemic. So the 2022 rate hike cycle I'm showing you guys was here. That conveniently went to retest pre-pandemic highs. The 2025 trade war tensions correction was here. That conveniently went to retest pre-rate hike cycle highs. So I still think that the relief rally we're seeing in stocks may be short-lived. If we do not get a full resolution with Iran-Israel tensions, where Israel still wants to continue the conflict, Big Yahoo himself was quoted in headlines yesterday saying that the ceasefire is not the end of this. We could still easily be seeing price action like this, where we could easily, on the minimum, retest pre-trade war highs and beautiful bullish market structure here before we continue the next generational bull run. So the main thing that I've been focusing on is, will the Strait of Hormuz fully open and Iran give that up? Will Iran's demands on Friday actually be met, where a part of their 10-point demand list is to be able to enrich their uranium, is to have some level of dominance in the Strait of Hormuz. They also want to put some level of a leash on Israel and prevent any further conflict permanently in the future, which Israel's been going after them for 30 years, saying they're close to nukes. And of course, we know that the reason US and Israel have been going after Iran is to stop any attempt at enriching their uranium or achieving nuclear weapons. So I think that this ceasefire is just that, as they exclaimed, is temporary, and it can fall apart very quickly by Friday, bringing markets back onto a risk-off environment, keeping oil more bullish and solid here. We have the Feds facing inflation shock from energy prices. We have Hormuz traffic remains restricted despite the ceasefire. We've had Israel escalate against Lebanon despite the ceasefire agreement. So tensions are still on edge. We still have markets in a little bit of fear mode. And I think we have to be very careful on stock markets that the upside may be limited. And I'm really going to be focusing on oil price because oil is not meant to stay this high for this long. And if it is, it's telling you a lot about the current fundamental catalyst in play and how the true market whales are positioned for it. But what do you have to say?
Yeah, no, I'm 100% with you on that. Like, I couldn't agree more with watching oil prices right now. Watching oil prices right now is like your global VIX, the volatility index that tells you long or short on the S&P. Right now, oil stays higher for longer. That shows us extra uncertainty. If it starts to come back lower, fantastic. But it's still above 90 right now.
Yeah, which is huge, right? And I really like what you said there, that oil in this fundamental context is like the VIX.
Absolutely.
It's a better signal than the actual VIX right
It
now
is.
of how volatility is going to be potentially being played out in stock markets, and it's going to give us way more clear information about inflation expectations, right? Because so much of inflation is linked back to energy there. Now,
Absolutely.
I know we wanted to give that beautiful little recap there about the current tensions, a temporary ceasefire, but we do have some data coming out in a couple of minutes. So
yeah, we do.
So I think before we start diving into some analysis for these guys on gold, dollar pairs, SPX, and giving them our opinion, we should just wait for these data results coming out literally in 60 seconds here. We have some key economic data up next, which I'll just box off here, a whole collection of data for us.
Yeah. We got a nice bundle that's all going to come within range and give us a whole lot of nothing.
Yeah. Yeah. I am hoping that we can continue to see inflation expectations spike to the upside.
That'd be great.
And then we'll see how GDP data is looking, initial jobless claims. But something you have to look out for is whenever you have this much data coming out at once, it naturally increases the probability of getting price whipsaws, lower time frame noise, liquidity grabs. So you always want to be a little bit more patient when you have a bundle, a cluster of data like this, where you can't have some reports conflicting against each other and so forth, right?
All right, let's see. Initial jobless claims a bit higher than expected. Nothing major. That one comes out every Thursday, guys.
Yeah.
GDP final lower than expected. PCE right on forecast.
Okay. PCE, GDP. So it's pretty, like you said, it's pretty much within range, within expectation. A whole lot of nothing, most likely. So in my opinion, with the collection of this data, let's go down the list here. Any data that's on forecast, preset expectations by the banks and economists that contribute to the forecast, that's just a nothing burger. That's going to bring no market impact at all. Initial jobless claims. Initial jobless claims is increasing, which highlights some level of weakness in the labor market. But to me, and I think with jobless claims is bouncing between 200K to 220K. That's also very normal ranges for jobless claims data, right? It's not really anything surprising. Now, the beautiful thing about the market economic calendar is we have a minimum and maximum expectation. We're still below the maximum expectation, highlighting that this data isn't a surprise. I think what can dominate here is that growth figures are starting to show a little bit more of a notable decline with GDP final, and inflation isn't consistently trending lower anymore.
Right.
We were in a period of time where financial conditions were kept tight, and every single CPI and PCE report, it was continuously trending down. Now we've seen a period where we're entering a little bit of trouble of inflation trending down, even entering a period of stagflation, in my opinion. So I still think the collection of this data can still keep rate cut bets on pause, can still keep growth concerns on high alert, but it's not going to bring that much volatility or that much market impact. What do you think?
Yeah, no, 100%, 100%. Right within forecast. It's funny. I mention every market episode whenever we do have economic news. Tell everybody, if you're new to market and you want to just be able to understand the economic calendar, keep an eye on the minimum, keep an eye on the maximum. If our actual comes within that range, then we shouldn't really be anticipating a big move. Markets move off of three main emotions: surprise, uncertainty, And what was the other one? Surprise, uncertainty.
And
Oh
if you
my
have
goodness.
extreme optimism or yeah.
Oh, that's killing me, man. I'm gonna have to come back to that.
Yeah. But yeah, so when we're looking at this data, there's some growth concerns. A lot of the other data is within range. We are seeing some trouble with inflation continuing to trend down. Overall, the economic data is pretty mixed. I think before we jump on the charts, I just want to scan out the news feed here. But we're still seeing some. This is pretty notable. It's not bringing immediate market impact yet. It's not something that's in our high impact, but it is breaking news that we have to look out for.
Yep.
Iran will allow no more than 15 vessels per day to pass through the Strait of Hormuz, which is still a pretty aggressive restriction there.
Yeah.
It's not that open of a passage or a safe passage through the Strait of Hormuz yet. We still have that restriction, which is keeping oil prices elevated here. But let's do a quick scan of some of the headlines we've been seeing that has been notable over the course of the last 24 hours. It was really interesting seeing the U.S. general talking about how they've destroyed pretty much 80 to 90% of Iran, all of their military capabilities, their Navy fleet, and so forth. Yet the U.S. has been offering the ceasefire or saying that they need to come to a deal. So that's been pretty interesting.
Yeah.
Now, I think some of the key things that we need to look at in terms of this temporary ceasefire is one, the Strait of Hormuz is not fully opened yet. There's still a ton of restrictions there, and Iran is still maintaining dominance in the Strait of Hormuz, which Israel and U.S. do not like. Number two, even though we had that deadline on Tuesday, 8 p.m. Eastern, Trump's deadline day, right? Trump always having these exciting moments like an action movie.
His 100th deadline.
Even though we had that, the official negotiations are set for Friday. Did you see those headlines as well?
Yeah.
So the official negotiations in Pakistan and in Islamabad is on Friday. And a part of Iran's 10 demands, they want some level of Strait of Hormuz dominance. They also want some level of a contract to reassure that the war will have a permanent end, that there won't be aggressions towards them at all in the future, and they still want to continue to enrich their uranium. And this is on Friday market close. 90% of the time when you have escalations of geopolitical tensions, it's over the weekend. It's not looking pretty, in my opinion, right?
Yep.
So,
good.
Yeah, so when we're going to the charts here, we still need to be careful. We're still seeing markets in a risk-off environment. We're still seeing defensive positioning. We're still seeing Iran's ceasefire reversal and a shift in sentiment there where it's still keeping oil very bullish. I think that's something we're going to have to note when we're looking at SPX pricing here, where if SPX doesn't clear above this cluster of orders and liquidity in this area around 6,800 to 6,850. I'm not saying it's going to be panic selling or an instant meltdown, but you can start to see a lot of that optimistic move being faded, a slow bleed out back to the downside, which realistically over the next day or two could easily come back down into 6550s or 6600s. And we might have to be careful, in my opinion, on gold as well, where if it's not really holding back above this key price zone in the 6820s, there is the potential gold could still continue to range, see some bearish rejections, as a lot of traders have been confused why gold had that initial higher time frame sell-off during these geopolitical tensions. But that's just taken into consideration that gold is not a favorable hedge of risk or safe haven at such record high prices, on top of rate cut bets collapsing, dollar starting to stabilize, and of course having the focus on energy inflation concerns and oil price surging. So I'm still going to be personally looking for some short-term day trades, taking my jabs at these volatile markets, not really looking to swing trade or marry any positions, but seeing if we get a pullback gold sells here. I'm going to be looking for some NYSE open pullbacks on stock markets, retest into this bearish liquidity zone, and some fading of the optimistic move here with some controlled, slow, choppy, false support being created, bearish corrections. And I think I'm still going to be looking for extensions of the oil buys if we hold above. Of course, if we get another deeper retest into the $90 a barrel flat price, but I think we're going to be holding above, also around 97 and breaking above 100s, and at least starting to fade out a good chunk of that downside move as the ceasefire seems very fragile. Supply disruptions in the Strait of Hormuz continue. We don't have full solutions or resolutions. And unlike the 2025 trade war, where a lot of the fear, uncertainty, and doubt was threats from Trump, they were threats that he could increase tariffs on China by 100% or 150%. Here, there hasn't been any threats. There's true real-world action going on of energy infrastructure being destroyed, still having repercussions of that, and of course, having continued supply disruptions in the Strait of Hormuz. So I'm still a little bit more on the dollar bullish side, oil bullish side, intraday trades, short-term trades, stock market bears, intraday trades, short-term trades, gold bears, and still looking for some Euro USD sells and GBP USD sells as well.
Yeah.
But if you want to share your screen and go through your analysis as well.
Yeah, for sure. I'll just cover S&P real quick because I couldn't agree with you anymore on the intraday short-term move to the downside. I feel like a lot of traders are on the wrong side of this. They're going to feel like there's fake optimism in the markets. And I call it fake optimism because this ceasefire, it's not the end of the war. We cannot think it's the end. It's a ceasefire. It's a temporary pause because their goal is to, yes, end it. But like Jeev mentioned, Israel already attacked Lebanon extremely hard yesterday. There's already been a disruption to the ceasefire in less than 24 hours. So how true is it really going to hold? And that uncertainty there is what's keeping oil still above and near that $100 a barrel.
100%.
Yeah, S&P, I would love to see us pull back to this 68.30 area. You mentioned 68.50 as that final point. I have the same exact level.
Yeah.
68.30 would be fantastic just to trade it back to the range, right? If we expect range, then we should not expect, oh, I want to see a breakout here and a big continuation.
Yeah.
No, we haven't found that optimism yet. Those were the three emotions, by the way: surprise, uncertainty, and optimism.
100%. So that makes a lot of sense. And yeah, like you're saying, we were getting clear communications from Israel themselves that the ceasefire is not the end of this conflict and that they're willing to continue this conflict, whether through diplomatic measures or through war. But we know the chance of Israel having diplomatic solution with Iran is very low because the list of demands, the 15-point list of demands from US is not going to be accepted by Iran. And the 10-point list of demands from Iran is not going to be accepted by Israel. They're not going to allow them to enrich their uranium. They're not going to allow them to have majority dominance in the Strait of Hormuz. So this confliction, as soon as they butt heads on the diplomatic approach, they're going to go back to their warfare tactics, right? And there has been this asymmetrical imbalance in the warfare where Iran has been using cheap, in military essence, easy to produce drones, $20,000, $40,000 drones that are getting shot down by $1 million US missiles or causing billions in energy infrastructure damage, right?
Yeah.
And we've seen, I was a big fan of Trump. I was a fan of Trump. I'm still, to a degree, a fan of Trump. I like how direct and to the point he is. I like how he's business-minded. As a trader, you can't hate on someone who brings more volatility for us to play, even though sometimes it may go against you. You're still going to have to look at both sides of the coin. But Trump has been cited 15 times since the start of this war saying it's over soon. We've won, right? And he's also said 3 or 4 times that he's already fully destroyed Iran. 90% of Iran is wiped out. So there's been a lot of desperation there with Trump, a lot of bipolar comments that's not really, to me, communicating confidence that their goals are being met. Then on the flip side, any threats of retaliatory efforts by Iran has been followed through. They said that they're going to attack GCC-linked U.S. infrastructure, and they have been. And them attacking their Arab neighbors has been a surprise to the U.S., a shock. They said they're going to control the Strait of Hormuz, blow up any ships that go against them there, and they have been doing that. Recently, in the last week, they were saying that they're going to hit U.S.-linked businesses.
Yeah.
And we've seen that with Oracle, Amazon, and so forth, right?
Yeah.
So we still have these doubts as well. With the ceasefire, like you're saying, it's already crumbling. Israel's already been attacking Lebanon. Iran's deputy foreign minister says the U.S. must stop Israel's attacks on Lebanon for them to come to an agreement officially on their Friday discussions. They're going to have these peace talks on Friday, conveniently at market close, so us retail traders can't get in positions. And to me, it looks like those peace talks are going to crumble because Israel does not want a ceasefire. Israel does not want a diplomatic resolution. And this isn't speculation. They've communicated that to us in headlines. And when you're looking at how to validate this information, price is always right. Oil would not be sitting at $100 a barrel if there was a true peaceful resolution. It would be melting back down to $50, $60 a barrel, back to equilibrium prices, right?
Yep. Exactly. So, that's why, like we said before, the oil's a much stronger VIX right now for these markets. Oh, you're muted.
Oh, yeah, sorry, 100%, 100%. And we're seeing this. Iran's deputy foreign minister, any peace in the region must include Lebanon. Yep. And Israel said, no, man, we're gonna keep going after them. So those coming hours are very critical. And you still have the ceasefire violations that are taking place. Now, huge. It was a temporary ceasefire for one. The official talks are on Friday, and the ceasefire was already seeing violations past the grace period within the first 24 hours. That, to me, is showing how fragile diplomatic talks are and how the diplomatic talks were nothing but a measure for the markets to get a little bit of relief. Suppress oil price, which has been doing tons of damage to global economies, especially the U.S. economy, which has been damaging inflation expectations and pushing back those rate cut bets that Trump has been wanting so desperately, and to give a little bit of relief on stocks. Very similar to the 2022 rate hike cycle and Russia versus Ukraine tensions, where you have such aggressive bear market rallies, dead cat bounces, that is buyer traps, creates this euphoria that ends up getting faded out until there's a true resolution, right? So I think that the ceasefire can crumble, very fragile. Tensions can continue to escalate. And these tensions aren't trade war threats by Trump. It's continued ships being destroyed in the Strait of Hormuz, continued passage restriction in the Strait of Hormuz, continuation of refineries being damaged, and that onslaught and ripple effect that continues to damage oil inflation expectations and rate cut bets. So all of that is still taking the primary focus. And I think we're going to see that fall apart. The ceasefire diplomatic talks fall apart through the rest of this week. More importantly, over the weekend, where tensions usually escalate more times than not. Probably see Monday, oil open up with a gap that fades out. This move, oil open up back at 108 to 110.
Yeah, I'm with that 100%. And it's, you know what it is? I want to touch on something you mentioned before about how they announce these announcements, all these meetings, they usually occur after hours, right? They occur when markets aren't open. Some people think, oh, it's because he doesn't want us to make money. He doesn't care about us, man.
Yeah, we're just saying that as a joke. Like,
yeah. But he does it, and every president does this. Go look in the past. Presidents will do this because they don't want to induce a lot of panic. Yeah. If they say something during market open, and it sounds like, oh my God, there's going to be a bigger war, we're going to attack them harder, and people panic sell, and markets sell off 7% in a single day, that's not going to look good on the president. But if he says it Friday and lets people settle and break the news down over the weekend and calm down, it's a much simpler and easier approach.
And that's a great point about the panic selling, because the panic selling can be extremely volatile, where if you have something like a 3 to 5% drop, everybody's going to start offloading their positions. Everybody's going to start short selling, and that 3 to 5% drop can switch to a 7% drop in the matter of milliseconds, right? And it's the volatility that kills, right? If you have stock markets in a bearish market and you're seeing it go down in a slow, controlled fashion, where you have this price stability in aggressive pullbacks, it still maintains some level of control within the US economy for the corporations, for the hedge funds. They got that time, that grace period to unwind positions, to react accordingly. And you don't see anything in terms of panic selling, right? Panic selling is shock to a market that hurts everybody, unless you're obviously doing a Michael Burry big shorts play like we've been doing from SPX 7K. But so this is what we're talking about right now in the newsfeed live. We're getting 5 minutes ago, Iran's deputy foreign minister says any peace in the region must include Lebanon. This is something that's going to be very important to note for the Friday negotiations. And then we're still seeing the headlines from Israel right now, right? So this is crazy right now.
I'd love to highlight, let's go into the breaking news tab on the news feed and let's search up Israel. Because guys, what you could do with market, instead of having to go online and Google this headline, that headline, what's Israel doing right now in the war, use your market terminal, type up a keyword, and it's going to pull up every headline associated with that. And then you could also filter it through breaking news and just get those high impact ones too.
100%. Beautiful thing about that. So yeah, that's the crazy thing right now is that we're within the same 15 minutes, we're getting Iran's president saying Israeli strikes on Lebanon is a violation of the ceasefire agreement. We're seeing Iran's deputy foreign minister that the U.S. must stop Israeli attacks on Lebanon. And then Israel is just issuing an evacuation in the capital of Lebanon, right? In Beirut. They're saying that there's an evacuation warning for ahead of a possible attack they're going to do. They've already been warning that they're going to hit their hardest level of attacks in Lebanon coming up there, right? So in my opinion, we're already seeing a little bit of continued oil bulls there. If oil continuously holds above this price zone here, lower time frame bullish structure, we can start to see the legs of the ceasefire optimism getting faded out. Not as volatile as the optimistic play, slowly but surely still seeing that oil price stability and starting to fade out a good chunk of this downside move while we see some buyer profit taking on stocks and stocks turn a bit more bearish after some New York Stock Exchange liquidity grabs. The headlines we're getting through the last 24 hours is just giving us pretty clear signals and clues that the Friday negotiations are going to fall apart one way or another, whether it's with no agreement on Iran stopping their uranium enrichment, whether it is with no agreement being met on who gets full control of the Strait of Hormuz, whether it's with no agreement being met on Lebanon being a part of the ceasefire agreement and resolution, which Israel doesn't want any of these things, right?
Yeah. Israel's like, no, we just want to keep bombing. And guys, this is destroying the odds of a rate cut this year.
Yeah, 100%. The Feds were already facing a little bit of trouble on their rate cut path with tariffs ripple effect through inflation, and that they didn't meet their inflation goals yet at all, right? So they still had to maintain tighter financial conditions. So stock markets can still see that bit of bearish pressure as well. And like you're saying on the Fed watch tool, rate cut bets have been getting obliterated.
Yeah. Hard. We were looking at a 41% chance that by July, with our new Fed chair, we're going to get a rate cut. Now we're looking at just a 2% chance of a cut. And we're even looking at now a 2% chance of a hike.
Yeah, which is crazy. I don't think that, obviously, I don't think they're going to hike, but the fact that a possibility of a hike is coming to the table is very telling of how the markets that are forward looking are approaching these inflation concerns, right?
That uncertainty right there. People are uncertain. How are we going to react? We were optimistic for cuts. Now we're not getting cuts. Now we might get hikes. That's uncertainty. We don't know what's going on.
Yeah, and stock markets hate uncertainty. Stock markets want certainty of more growth, of more innovation, which, mind you, outside of all this geopolitical tension talk, right? What I wanted to ask, what's your view on the whole AI tech sector?
Oh, that's tough, man. So I love AI as a just all around. I think AI is going to keep evolving. Claude's making it crazy. We have 100%. AI agents.
The technology is not going anywhere.
Yeah, but as for like profit factor, companies doing well, I think the AI bubble of all these hundreds of companies that came out last year thinking, oh, we're going to make our own AI. They're going to lose money. They're already losing money. They're going to go bankrupt. Energy prices for that is going to go higher. Memory chips are going to get a lot more expensive, as they already have been. That would be a stock like Micron, if you guys want to look into that. The cloud servers, there's so much, man. Even the cooling factors, using a lot of water.
I think there's a huge disconnect between the expenses and the profits right now.
Yeah.
OpenAI hasn't turned a profit yet, or they might just be starting to turn a profit. And we're not even talking about the smaller AI company. We're talking about the leader of the AI companies. OpenAI hasn't even turned a profit yet. They may lose their huge data center contract with with Microsoft, because they've been eating into so many costs. And like you said, the amount of energy consumption of AI is huge. And so far, the cost of energy is going up while the profits have remained minimal to nothing at all. So I don't think the AI technology is going anywhere, but the greed and corruption within the industry and expectations and promises that were given to investors is looking very similar to the .com bubble. It's like the technology of internet. Internet was innovative, revolutionary, transformed our world. But during the .com bubble, you had huge amounts of corruption and greed, huge expectations that were not met, huge promises that were not fulfilled, and investors obviously got killed there. We are seeing something similar with AI tech company valuation concerns at the moment, and that gap hasn't been filled, of having extreme growth in AI, huge profits that overtakes the amount of expenses and investment put in.
Yeah, it's going to be wild. It's going to be something. And you know what it is too, to think about markets and the U.S. economy too as a whole, and even just a lot of economies globally right now are in a very tough point. And for us to sort of see a global reset, for prices to come back to where they were, not even where they were, but just come back lower, because at this point everything's so expensive. We're going to need to see a sector or two or three see a crash, right?
Yeah.
So there's got to be,
and we're not talking about some depression, like a correction, right? Yeah, prices need to simmer down, and especially in the energy sector, especially when you're looking at some of the resources and material that goes into a lot of the electrical power, your EVs and so forth, your batteries, computer chips. I 100% agree with you there. But so far, we're not getting too much action in the markets. Looks like we're going to get that action after New York Stock Exchange open. To be honest, Asian session's been having a lot more fun over the last week, ever since Trump had that one speech at 9 p.m. Then he had that deadline day at 8 p.m. Asian session's been getting a little bit more attention compared to New York, but I'm still going to be sticking to the same guns of expecting a little bit of vulnerability and a little bit of uncertainty on stocks, and still holding a bit more bullish on oil. And like a great example I love that you shared today is that oil is the true VIX of volatility and understanding uncertainty amidst these geopolitical tensions in the context there.
Yep. The last thing I want to mention on the S&P 500 right now, guys, is obviously looking at the chart. We know we're extended. We know yesterday's New York session, we were given a range. But if we zoom out, we look at the daily time frame, even delete the drawings. We had a strong move yesterday. There's no question about it. We had a strong move. The only way I would consider possible longs, though, is if we can get above that previous day high. If we don't stay above and get above that previous day high, why would you even think there's going to be a trend?
Yeah. And you can see, like, looking at your daily chart there, we're just retesting that previous support that was holding so steady. That could now be potentially used as a resistance if we don't break the last daily highs candle there. There could be some trouble. And again, we're not calling some black swan event. We're not calling some crash or hoping for a market crash. It's just looking at the facts that if we don't break that price, it's showing that some of the buyers may not continue adding on more positions. And we could see a good chunk of the ceasefire optimism move get slowly faded out, and a buyer trap being taken place there for potential exit liquidity for the whales, in my opinion.
Yeah, absolutely. Awesome. Gee, you got anything you want to leave us off on? Absolutely killer show today. So great to have you on.
Thank you, man. I appreciate it. Time flies when we're together here, eh? 45 minutes goes by like 5 minutes, in my opinion, because especially in these markets where there's so much to talk about, which is great for us, right? Great for us following fundamentals, analyzing price here. I absolutely love it. Absolutely have such a deep passion for it, which has been reflected through our development and advancements with the market dashboard here, right? We've updated the market dashboard with those high impact, even better, more refined filter there. You have all of this optimization on the flow. We've updated some of the general markets here. It's just beautiful. I love to see our platform continuing to get better and better with our passion for fundamentals and providing that clarity and bridge to gap the knowledge discrepancy there for retail traders. You know what I mean? But I want to thank you for having me, man. Always a pleasure to chat with you about the markets and have you on our market team as well.
Bro, it's an honor to be part of the team. We are a team full of killers, team full of goats, and we've got a fantastic platform here that, guys, it's just getting better day by day by day. We will keep working hard. We will get you guys the best platform out there. If you don't already consider this the best platform out there, because we will keep on grinding. Jeev, thank you so much, man.
Thank you, man. Have a great day, man. Thank you guys in the chat. If you guys like this, comment below, send a like, show your support for Kevin and the Market in the Morning show, consistent every week. And we're going to be back at it weekly as well with my guest appearances too.
Let's go, baby. Yes, sir. And guys, tomorrow, special episode, CPI comes out tomorrow. We're going to have No Lab come on. So super cool there. Always bringing you guys the best. And if we have big news, I'm making sure we cover it for you. So like Jeev said, hit that like and subscribe and have a great day.